guys, welcome back. In this video, we are talking about the AMC Resurgence, the generational MOASS, unstable leverage, and many more in this video. First, we're taking a look at this. AMC is having the best box office Q1 since before the C19. Note, the films released in Q1 of 2020 were filmed, edited, and slated for release prior to the shutdowns. AMC is having a massive resurgence and is doing so far with far fewer overall films. And so what we can see is essentially the fundamentals of the overall box office and obviously how that relates with AMC. And you can see how AMC is improving. Now, this is extremely important because one of the biggest factors to take a look at for AMC is obviously the fundamentals, especially when we have the earnings call coming at the 25th of February. Now, of course, this is for Q4 of 2024, and we're talking about Q1 of 2025, but it's about understanding how the general box office is improving. And from the latest earnings that we will be seeing, we'll obviously understand in terms of how AMC is operating, how they're handling costs, what their profitability is like. And with that, we can obviously use it on the Q1 of 2025 as well. And so this is what we've talked about in terms of understanding when you compare AMC and the short sellers of AMC, you can see that we are in two different positions. AMC is experiencing both improvements in the industry in which they're in and also the company itself. When you take a look at the short sellers of AMC, what you will see is that firstly, the industry they're in, we can see how the market is extremely unstable right now. We're seeing how the liquidity is running extremely low, and we're seeing how firms who are, of course, short sellers are seeing decreases in their revenue, seeing decreases in their profitability and their capital. We talked about how Virtue need to take up more loans. We talked about how Citadel needs to take up more loans. And so when you compare that with AMC, you can see that is light and day. And what we can see is obviously just overall, the fundamentals is that we are improving. And so that itself is indicating how AMC is going to improve and how obviously AMC will grow to be an even bigger company. And so it's very important that we obviously take a look at the earnings when it does come out. We'll of course cover it on the channel, but it's good to know that we are going to be seeing the fundamentals improve and obviously bring us to an even higher level. Now, the next thing is they actually want us to believe that the price of AMC is around $3. How fucked do the shorts have to be to hope this? It won't be a normal MOASS, it'll be a MOASS to the power of 10. Hodl and buy the dip are my key to generational wealth. So we've just talked about how the fundamentals of AMC is showing, and clearly the price does not reflect whether it's the current state of AMC nor the future state of AMC. And so for them to try and make us believe that AMC is around $3, we know that is ridiculous. Everyone who's obviously in AMC, and when you take a look at it just from an unbiased point of view, and again, whilst we are of course covering AMC, we do have to look at it with an unbiased view. But when you understand in terms of the fundamentals, when you understand the structures, the operations of AMC, you know that even if we aren't supposed to be priced at $100, at $300, or whatever you think it is, we know that it definitely shouldn't be around $3. Like I said, we've never experienced true price discovery for AMC. So we don't even know how far it could go. If AMC were to show true price tomorrow and it was at $50, then that would obviously create incentive for people to buy in, and that could take AMC to $100. Now, again, we don't know that because we've never seen true price discovery. But what we do know is that it shouldn't be around $3. And so this is what we talked about because we've seen the tokens, we've seen the naked shorts, we've seen the synthetics, and we know that they've put so much money in order to suppress AMC. Once they can't do so anymore, it will be a massive MOASS, and that will be the generational wealth transfer. And that's why everyone is obviously understanding. The short understand this, retail understand this. That's why retail have patience, and shorts are getting extremely scared and of course panicking. You can see this, and this is what we talked about in terms of the scale of things. Wrapped AMC was issued as a tokenized derivative of AMC stock without SEC registration. Now, we knew that this was obviously given out because they needed a way of locating AMC. They needed a way of shorting AMC shares without actual shares of AMC. And when you take a look at what the total supply was, it was over 8 quadrillion tokens, which obviously vastly exceeds the actual outstanding shares of AMC of 450 million shares. And so you can see that the scale of this whole situation was extremely big. And that's why, going back to what we talked about here with generational wealth, is because we understand truly how much these shorts have been doing in order to suppress AMC. And remember, this isn't something that they will get away with it. The only way for them to get away with it would be either for AMC to go bankrupt and get delisted, or for every single retail investor of AMC to obviously sell their shares. Now, the latter, for me personally, I think that it's impossible, or at least 99.9% impossible. And for the first, the prior, in terms of AMC going bankruptcy, well, we've already known how AMC is doing, and that's why I said it's important to obviously take a look at the earnings, because it does give us an outlook in terms of how AMC is performing. But even then, like Adam has said, like we've discussed on this channel before, there isn't, at least for the next few years, showing any hint of bankruptcy whatsoever. And so we know they can't get out of this. So whilst they can kick the can down the road, they will still eventually have to, of course, pay for this. And you can see how regulations are obviously trying to delay this, and regulations understand in terms of how serious this is, because you can see this. Delaying institutional short reporting and putting the CAT system on a diet can't stop the inevitable. They know naked short selling is a systematic risk and scrambling to find a way out. Shorts are still dogged, and this confirmed it even more. Know what you hodl. And so we knew what the CAT system was supposed to do. We knew that it was supposed to bring transparency. It was supposed to show that anyone who were doing anything that weren't allowed were meant to obviously be exposed. And whilst the CAT system was active, we did actually see that. We saw in terms of how they hit the synthetic shares of AMC through options. We've seen many things. And again, that's why they proposed the rule of course, reporting the short positions. It was now delayed by another year. But all of this shown that the shorts are extremely over leveraged. Why would they stop something if they weren't scared, of course, to expose a hundred of billions, if not trillion of dollar scam in which the short sellers are, of course, trying to pull? And so the fact they've done this obviously confirms what is happening. And you can see, I'm not buying the SEC's excuse to delay short selling reporting data. Doge was able to uncover reckless US aid spending within days, if not minutes. And so their excuse, without further guidance, it can negatively impact the quality and accuracy of the data reported to the commission. Obviously, you can see a different way. Translating it for the retail traders, the SEC will continue to protect market manipulators and ignore market corruption at scale, because we don't know how to fix it and not crash the markets and bankrupt our future employers. And so that's what we are seeing. The fact they've stopped this after it's already uncovered in terms of the naked shorting only means one thing. They know that if they were to take further actions on these synthetics, on these naked shorts, then it could crash the markets. It could bankrupt their the institutions. And that's why they're not willing to obviously go along with this. When you take a look at the overall outlook, and this is why they're worried. Fed's power, US federal budget is on an unsustainable path. And that's, of course, worrying. Now, we just talked about how the overall market obviously isn't good. Earlier in the video, we talked about how AMC is in a market that's operating, is in the industry that's, of course, going up. Whereas when you take a look at the financial institutions, they're in a market that's extremely unstable. They don't have access to easy liquidity. And you can see this, the trade is out of control. The first 4 months of financial year 2025 produced a deficit of $838 billion. That's $306 billion more than the deficit recorded in the same period last fiscal year. And so this is what we're looking at. We're running a 2.5 trillion annual deficit. And so if you need any signs of what we're looking at, not just for the stock market, but for the overall economy, this is where we are at. And so you can't take a look at this and then expect that people who are in the financial markets to obviously be doing well, to be operating well, doing the normal routines. And so that's why they're trying to let these short sellers get away with it. You can take another look in terms of what's very, very important is that Citadel is a significant participant in the US Treasury market, both through its hedge funds and also as a liquidity provider through the separate market-making businesses of Citadel Securities. Now, we talked multiple times about in terms of what it is to be both a hedge fund and a liquidity provider. But when you understand that they're a significant participant in a market that's seeing illiquidity issues, that's seeing massive declines, we understand again in terms of how they're not able to operate. And so when you put all of these things together, you understand that not only are they having unstable leverage, they're also seeing their number one short to see a resurgence. And that's what we talked about with the generational MOASS. And you guys, thanks for watching. I'll catch you guys next time.